Netflix revolutionized streaming, and they're still one of the most prominent players in the field. In today's video, we want to look at whether or not buying the stock at today's price could make sense. First of all, let's look at their last year's numbers. They made 45 billion in revenue, with around 11 billion of that in net income, which gives them a profit margin of around 24.3%. And they're currently selling for $86. They recently had a stock split, which gives them a PE of 33 based on last year's numbers. So a bit more on the expensive side. Now, in order to evaluate whether or not buying Netflix at this price today could make sense, we're going to look at two different cases, a bear and a bull case. For both cases, we're going to look at a projection of 5 years. Their years of explosive growth are probably over, and no matter what case you look at it. I think for a bear case, you can go a bit lower than what analysts are expecting, expecting that the competition rises even further, that they're struggling to keep coming up with good content that hooks viewers and so on. So I think a 7% revenue growth for a bear case is still good enough, but of course not as good in order to justify the valuation that it's selling for today, probably. And of course, the competition is high in this field, so in a bear case, I would assume that their profit margin shrinks. And they have been starting to buy back a couple of shares, but not a lot. And in this bear case, they wouldn't have a lot of cash extra for that. So I don't expect much movements in the share count. And for PE, it's a bit difficult. Netflix was and has been always considered as a more premium company and has been selling for higher PEs for a lot of times. So giving it a PE in a bear case is a bit difficult. For a company selling at 7% revenue growth, I would go with a lower PE of 19, but on the other hand, I do expect Netflix to still get a bit higher PE overall, even in a bear case. So I'm going to keep it at 19. These numbers will take the stock price to $53.98. And if bought today's price, that would be an almost negative 9% annualized return. But now in contrast, let's look at a bull case. So for the bull case, we could assume that their revenue growth is 11% over the next 5 years, and their profit margin stays around at a healthy 22%, and that they maybe buy back a couple of more shares, and of course that their valuation is a bit higher. I chose 23 in this time. You know what, let's go with 24. Give them a bit more of a premium edge for companies still growing at 11%. And that will take the stock price to around $116. And if bought today's price, that would be only a 6.29% return. And if we combine these two cases, this would almost keep the stock price at the same dollar amount. So not much change here. So there you have it. Those are my projections for Netflix. For me personally, the stock is currently a bit too expensive to justify purchasing it. Of course, you can make your own assumptions, make your own research. Don't just listen to me, but I hope this video helped you a bit in making a better informed decision. So there you have it, and I hope I see you in the next one.